Hey, good morning, everybody. Paulo Brandt's Clear to Close Brokers. Let's talk about mortgage rates, housing, the Federal Reserve, and somehow oil tankers in the Middle East. Because believe it or not, they all matter. So what do you say we start with interest rates? Today, VA loans are sitting at 5.75 FHA, about 5.625. Conventional 6.25, jumbo at 6%. Now, all these are shown with up to 1 point, great credit scores, and 25% down with jumbo and conventional. Now, here's what's interesting. A week ago, everybody was worried about the Strait of Hormuz. If you're wondering what that is, don't worry. Most Americans couldn't find it on the map either. However, but they will absolutely notice it if it's closed, because roughly 20% of the world's oil moves through it. And when oil gets disrupted, prices rise. When energy prices rise, inflation tends to rise. And when inflation rises, mortgage rates usually don't send thank you cards. Last week, things looked a little calmer. The United States and Iran agreed to an extended ceasefire. The Strait stayed open. Everybody was happy. Oil prices started to move lower. Then over the weekend, the story changed its tone a little bit. New threats surfaces, closure. Markets started wondering if we'd be right back where we started. Fortunately, the Strait remains open. Oil is lower this morning. Gas prices are easing, which is all great news. And the market seems to believe, which is important, we're moving towards stability instead of escalation. Anyways, that's how they feel for now. Meanwhile, the Federal Reserve met last week. And for the fourth straight meeting, they did absolutely nothing, which, depending on your perspective, is either reassuring or frustrating. The Fed left rates unchanged. Now, there's no surprise there. We knew that was going to happen. But the interesting part wasn't what they did. Rather, it was what Fed Chair Kevin Warsh said. Warsh appears to be asking a simple question. What if we're measuring the economy the wrong way? Think about that. That is huge. That's a huge statement. Many inflation reports tell us what happened over the past year, but consumers don't live in the past year. You don't live in the past year. Businesses don't make decisions based on last year. And homebuyers certainly don't make offers based on last year. They make decisions based on what's happening right here and right now. Warsh now announced 5 task forces to review economic data, inflation measurements, productivity, jobs, and how the Fed communicates. Translation, the Fed may be rethinking how it evaluates the economy. This doesn't mean lower rates, but it does mean they're asking different questions. Different questions will lead to different decisions. Now, let's talk a little bit about housing. This is really where it gets really interesting, because according to the headlines that we're seeing, housing is unaffordable, impossible, frozen, broken, and every other dramatic word you can think of. And then buyers went out and signed more contracts anyways. Pending home sales rose 3.8% last month. That's the 4th consecutive monthly increase. Read that again. The 4th consecutive monthly increase. I don't know why I said read that. How about listen to that? Anyways, mortgage rates remain elevated. Affordability remains challenging, yet buyers keep buying. Why? Why are they buying? Because life doesn't always wait for rates. People get married. People have children. Families are growing. Needs change. Jobs change. There's multiple things that happen. Kids they change schools. They want to go to a better school district. And eventually waiting becomes more expensive than actually moving. Now, here's where the story gets even more interesting. Builders are actually slowing down. Housing starts dropped to their lowest level in 2020. Builder confidence is falling again. So buyers are still buying. Builders are building less, and somehow we're supposed to be surprised at inventory remains tight. That's not a prediction, by the way. That's just math. That's what's happening. Now, each area is local, so make sure you talk to your local real estate agent, but this is on a national level. So what moved rates last week? Truly just 3 things. Number 1, the Fed held rates steady. Number 2, oil prices fell. And number 3, housing demand came in stronger than expected. That's the real story. Now let's take a look ahead at what's going to happen this week that can impact interest rates. Thursday, is a big day. We'll get the PCE inflation report. That's the Fed's favorite measurement of inflation. We'll also get GDP and jobless claims. If inflation comes in cooler than expected, mortgage rates could improve. If inflation stays stubborn, rates can stay where they are. The market wants confirmation. That's what everyone is waiting for. What is my takeaway? Let me think about that. A month ago, everybody was worried about tariffs. A couple weeks ago, everyone was worried about Iran. There's always something. This week, we're worried about inflation. There's always something that we're going to be worried about. The headlines continually to change, but the absolute mission of fear does not. Watch inflation. That's the key piece to interest rates. Watch jobs. That's the second piece, and then housing demand. All right, three things that continue. These are, by the way, the three things that continue driving mortgage rates. Now, before I go, two quick announcements. This is so important. This Thursday at noon, I'm hosting a Great Income, Bad Credit webinar. It's completely anonymous, so your identity is protected. If you've been told no, don't assume that's the final answer. We're going to show you the roadmap to homeownership. And by the way, if you attend and join and follow the path, you'll be celebrating the holidays in your new home. Thursday evening, I'm hosting my first-time webinar, first-time homebuyer webinar. It's absolutely amazing. I'm going to show you how to negotiate, down payment programs, all the stuff to make you successful. The myth is, as we just talked about, housing is unaffordable. But here's the thing. It's not. People are buying a home is closer than you think. The key is in this market is not to overpay, and I'm going to show you how to do that. Hope to see you this Thursday. Hope you have a great week. And if we're not working together, hang on, let me just turn this off here. If we're not working together, we should reach out to me. Let's do what's called a hopes and dreams conversation. I don't pull credit. I don't take applications. Use my 20 years of experience. Let me put a plan in place for you and your family.